Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Well, as you can see, I'm not at the office today. I'm actually working at the home office because we have great news to share. We are undergoing our office remodel. Downstairs on the first floor of our office, we are creating a podcast studio for some great interviews and content, as well as a stage sitting area for some more in-depth conversations, some education, and more of a casual approach to how to deliver information to you guys on a consistent basis. So we're gonna have that wrapped up in just a couple of weeks, but in the meantime, we're gonna be recording from the house over the next few days. So last week, you may have seen some headlines that the FHFA had reversed its adverse marketing fee that it put on the marketplace back in 2020. Now, this was that 0.5% fee that you heard us ranting and raving about. It was essentially just an additional cost to any homeowner who did a conventional refinance during the big boom of 2020. Now, a lot of us kind of thought that smelled funny, like that's just a big money grab during a time where there's rampant refinancing, and the answer at the time was, well, this is money that's supposed to go help us to get out of conservatorship. Well, also as of recently, the person at the top of the FHFA has been replaced by the new administration. So they will now not be exiting conservatorship, and they have thus ended their adverse marketing fee. So, any of you who are currently in the middle of a conventional refinance, your adverse market fee should be removed before you fund and close. And anyone who needs to do a conventional refinance moving forward, the adverse marketing fee is no longer. The markets are still continuing to digest inflation and the most recent inflation numbers, but there is some growing sentiment that what is being reported is actually not even as bad as it actually is. You know, in some cases for certain products or in certain parts of the country, you can see inflation running way higher than the numbers that are being reported, and that's starting to give some people a little bit of the jitters. If you couple that with the kind of slower pace of buyers buying, there's still a lot of them out there, there's still more buyers than sellers, but the slower pace of buyers, you can start to see a little bit of a preview of what might be ahead in the next 3 to 6 months. One of the things that we're noticing here is that although there's still homes coming in the market for sale, there are a lot less people making bids on those homes. Not only is the price of the home going up, but interest rates have been fluctuating, of course, since the beginning of 2021. And you can't just have both working at the same time. You can't have increasing home prices and increasing rates and that be matched with affordability still. Plus, the other thing is you're gonna deal with a little bit of buyer reluctance at the top. People who are saying, you know what, I will not pay that amount for that house. It's just not worth it to me, or I don't see the value of that number connected to that physical space. So you're starting to see a little glimpse of those things happening, and sometimes in the past what's happened is that eventually became a screeching halt, but it looked like this in the beginning. So this is not to say the sky is falling. This is not to say there's a collapse coming, because the underpinnings of why there's so many people in homeownership right now have a lot to do with the underwriting and qualification standards that have changed since 2010 after the last collapse happened. So what you should be looking for right now are just signs and pieces of evidence that things are changing, the tide is changing, and you'll see that in buyer behavior, you'll see that in seller behavior, and you'll notice that in your own spending behavior. Maybe you're not so quick to go and spend going out to do XYZ like you normally did. Maybe you're looking at the gas pump and the milk price, and when you go out the register at the store, at the bottom of your receipt going, I bought all the same stuff, but that looks like it's $50 more or $75 more. So keep an eye out for those kinds of things. That definitely tilts and shifts buyer behavior. And when that goes over the course of months and even potentially a couple of years, it dramatically changes the landscape of what pricing looks like, what buyer behavior looks like, and then what that translates to in real estate and a mortgage. Thank you so much for watching. I know that was a lot of different information today, but there are a lot of moving pieces happening in the market right now, and we want to make sure that we bring to you kind of our opinion about things, what we think is happening, why it might be happening, to bring some clarification to what might be sometimes complicated issues, but we want to try to make it simple, and we want to make it easy to understand. As always, if you have any questions, of course, please reach out to us, send us a DM, leave a comment below, or you can reach us at the office. We're happy to help you out. Thank you for watching. Have a great week, and we will see you again next week.